The Kings Local School District Board of Education has fulfilled its commitment to make the 2022 operating levy last the full 3 years. Now in 2025, additional revenue is needed to maintain the district's day-to-day operations. As a result, the board has placed an earned income tax with a corresponding property tax reduction on the November 4th, 2025 ballot. Currently, Kings operates on a 3-year operating levy cycle. Additional revenue is needed to maintain current student programs, staffing, and day-to-day operations. The district is projected to have a negative cash balance in 2027 without additional revenue. Kings receives limited state support under Ohio's funding formula. State funding was less in 2025 than 2024. 91% of Ohio districts received more state funding per student than Kings.
Since 2022, the board and administration have identified savings and additional revenue totaling $8 million. These cost-saving measures have had minimal impact on the student and classroom experience. The Kings Board has established 2 goals: create long-term financial sustainability and reduce property taxes for all homeowners. The board has placed a measure on the November 4, 2025 ballot with 2 components: a 1% earned income tax on wages and salaries of Kings residents, and a 1 mil property tax reduction for all homeowners. The earned income tax would apply to wages, salaries, tips, and other compensation and net earnings from self-employment, including income from partnerships, to the extent the income is included in modified adjusted gross income. It would not apply to pension income, Social Security benefits, disability benefits, or capital gains. As of January 1, 2025, 210 of Ohio's approximately 600 school districts have some type of income tax, according to the Ohio Department of Taxation.
If approved, the ballot issue would reduce property taxes by 1 mil for all homeowners. The board is committed to continuing to lower property taxes and has approved legislation requiring an annual property tax review. Additional property tax reductions could occur in the future. If approved, will provide funding for the duration of the 5-year forecast without the need for another levy request during that period and potentially longer, and establishes a more sustainable funding model. This approach reduces the reliance on frequent property tax levies and minimal state funding while maintaining current programming, staffing, and services.
Without new revenue, there would be approximately $9 million in budget reductions. Reductions would affect operations, student programs, and staffing levels. This measure will appear on the November 4, 2025 ballot. Voters will decide whether to approve both the earned income tax and property tax reduction.
For more information, follow the QR code or click the link in the description to our ballot webpage.